right. You guys can see my screen? All right, cool. All right, guys. So welcome to the first big picture chart talk. Like the chart talks we've done in the past, I'm going to go over the broad markets, I'm going to go over the major sectors, some top ideas, names that I'm in, and also some names that have posted in the chat. And also, if you guys have any ideas that you want to go over, just message them here. And if you have any questions, of course, we'll go over those as well. So before I jump into what I'm going to go over, does anyone have a question about the change or anything they want to go over now before I jump in? All right. All right, cool. So let's jump right in. All right. So we do have the Qs and the S&P virtually in the same upper channel. Market just grinding higher. And on my end, what I've been doing since the market has took out the new all-time highs here is I've been very simply just buying new all-time highs pretty much every single day. So outside of the usual automated investing, which a lot of us utilize through M1, or if you have Robinhood and you have it set up, but outside of that automated dollar cost averaging, on top of that, every day the market's been hitting new highs. Again, I've been adding to the broad index, just like we were doing when the market was crashing into April, going into a technical correction and into a bear market, increasing the buys on the low end. And then we get this path of least resistance higher. Again, each buy has been profitable as of yesterday from end of June. So very easy approach, just adding to the indexes. And if we look at the S&P, virtually the same thing. At some point we'll get some type of pullback into this range. But again, we don't want to fight the trend. Trend is higher. These aren't very crazy bullish engulfing days where it gets kind of parabolic. It's been this very slow, boring kind of breakout, like which we typically see during the summer trading. So it's all good for us. Small caps, again, want to keep on the radar. Again, that same kind of channel as the indexes, just not near all-time highs, but getting very tight here near support, where the Qs and the S&P are on kind of the upper end range of this channel. IWM, which has been lagging overall, still below all-time highs, but showing us a tighter little setup here. We're kind of buying up through this breakout level closer to recent support. And then in the macro names, again, the Dow 30, we see a very technical blue sky breakout forming. We have 1, 2, 3 major attempts at these all-time highs, getting very tight here. So like the S&P, like the Qs, adding through those new all-time highs, keeping a very close eye on the Dow 30 names, and also the individual names inside of that, which we'll get to when we get to the individual stocks. Moving on to some key sectors. Again, Qs and tech have been leading this market higher. Tech, new all-time highs today, closing bullish engulfing. Couldn't ask for a better sign. Again, as far as this move does go, when there is the pullback that we don't expect or we're not expecting to see, a retest of this prior breakout is still normal price action. Not saying this is going to happen tomorrow or next week or next month, but if we eventually do get some rollover, we should expect some kind of retest, at least backing into here before it settles out and pushes higher. So similar theme, tech very strong. These semi names were looking a little bit like a short-term topping pattern up here, given the pull last week. But similar thing we mentioned, it backs into this prior resistance level, turns into support, and it's now back in this little Mickey Mouse flag in between this 10-point range. So keeping an eye on the tech names, keeping an eye on the semi names, see if they can follow tech and push their new highs. And then kind of the laggard in the bunch has been healthcare and these biotechs. And healthcare again looked pretty terrible beginning of this year, but it continues to get tighter. It continues to step up off support. We're not seeing new lows getting tested. We're just seeing this little wedge starting to form. Again, very undervalued sector compared to all the rest. Tech pushing their all-time highs, semis at highs. utilities at highs, you have telecom names near highs, financials near highs. This is the one sector that is near the lower end of the range. But as this continue gets tighter, it should give us some opportunity. Again, could be a few months from now, but when this breakout happens, we'll keep a close eye on those healthcare names and catch that, basically catch up move with the rest of the sectors. So moving on from the sectors, we'll go into some names I'm keeping a close eye on. Again, we had this QCOM today, starting to poke out of this base here through this 160. Let me get rid of that old note there. But with earnings coming up on Wednesday, did not take this trade. Again, we'll wait till earnings passes, but just keeping an eye on this area. Maybe there's an opening range breakout after earnings through this like 164 area. But for now, want to keep on the radar until after it reports. Next up, we have SCSC. We can see very tight bull flag here. This is kind of the overall range. And then more recently, we can see the name continues to get kind of tighter and tighter here in this $2 range. So just keeping a close eye on that 42 breakout. Again, earnings not until end of August, so still plenty of time here if it wants to, break out and kind of run back into this 44 to 48 area. Next up, we have Visa. Again, we were talking earlier about the Dow 30 names. Dow 30 forming a nice bull flag breakout setup on its overall chart. And then we have Visa, one of those Dow 30 names, forming a nice little flag here under this 360. Again, earnings, it's going to be a recurring theme here. It's earnings season, kicking off. So earnings tomorrow, but if we get opening range breakout or, a non-crazy gap up, we can keep a closer eye on that one. Next up, we have Walmart. Again, we were looking at that entry last week through 96, and now we have this bigger breakout through 100. So that was more of that feeler entry. And then we have this bigger breakout setting up through 100. We have this ADP, similar to that Visa. We can see a pretty clear level of resistance at this 310 area. Again, not the tightest name, still a bit wide. But if we see this little pull in, we see, a nice higher pivot low to keep on the radar. Again, earnings on Wednesday, so we want to wait until after Wednesday for this name. Another Dow 30, very tight wedge forming in this Costco here. Gap down today. Again, still holding above the prior pivot low, still technically fine. So just keeping an alert for this 69 breakout to push that to new 52-week highs. And then lastly, we have this EXC. Again, utilities have been somewhat strong lately. We have earnings later in the week. But again, we can see the base that's been forming. It's been having some issues battling with this 44 breakout area. We get that pull in. Maybe it shakes out this 42. And we keep an eye on that next attempt, maybe somewhere around here in a week or two through that 44. So only current position I'm in is this SMCI. We took this, a few members through this 50. I got shooken out when it came back and retested. And this was a recurring lesson from my recent trades. And the biggest takeaway with this was when I have these break-even stops, is to be willing to buy the name back through the new breakout level. So got stopped out break even in SMCI, came right back, bought 54 on Friday, and, up 10% today. Looks great. Finally pushing out of that base. Again, very extended in the short term, but maybe we get, another push tomorrow into this kind of gap fill area and take some profits in the extended move that it's had. So taking this lesson, this retest lesson, we're going to skip the good trades because the good trades kind of work themselves out. But the bad trades I've had recently, it's been that same recurring theme with SMCI, where my emphasis is always to minimize the risk as much as I can. And what I've seen in the last month is doing that, I was too aggressive with how close I was keeping those stops break even. So BK, We had a very nice breakout, and I had that break even stop, which it got me out here break even. Not a big deal. Would have failed regardless, but I did not get back into the trade, and it still set up perfectly, and kind of off to the races. That me and George were in, and we kind of got broken out, got shooken out, and didn't get back in. And this is this recurring lesson looking back at my trades for the past few weeks. Same thing with this Alta. Saw the flag forming, got in. After a couple days, got pushed out break even, did not buy it back, and it goes higher. So we have, SMCI was the lesson learned, and fixing that mistake moving forward, which I've seen the results of that today. But seeing these prior mistakes in these couple of trades was where this lesson kind of came from. And in this lower VIX environment, giving a little bit more room than break even seems to be the move right now when volatility is extremely low. So again, broken record here, but with this EXPE, same thing, bought the breakout, but with the move, a few days of it chopping around, comes back to my price, I move on, break even stop, and don't get back in for the next move. And then lastly, same thing with this Google, bought the breakout, stopped out, and missing that second leg. So that was the recurring lesson on my end, was keeping them so tight with break even within those first couple of days. I should be giving them from the original out until it gets a real push out of that new recent range that a lot of these names tend to be in initially in that breakout. And seeing that lesson with SMCI was the last one. And it was okay, I have to be willing to buy this thing back, even if it's a different game plan, a different entry. I have to be ready for it. And, knock on some wood, got a nice 10% move that this trade more than enough makes up for those 4 or so break-even trades. So I have one more idea that Tesla mentioned in the group earlier. We're going to go over that. And if any of you guys have any ideas you guys want to go over, just unmute yourselves. Just mention the ticker. I'll type it up. We can explain the game plan and go through it. So Tesla's name was this QXO. She was looking at it through this 2230. Again, nice little flag here. This name's definitely been on a bit of a tear. We can see this nice little flag, another little mini flag here. And now it's really starting to consolidate out, which looks great. And then you don't have earnings, for another few weeks. So maybe they get a move through this 22. Realistically, probably you get a retest this 25 area. That's going to be like the first kind of battleground in the name, so to speak. But if you can be buying it 22 versus 21, risking $1, and you can make 2 or 3 in the name. So definitely a few ideas out there. Again, the main lesson for me from my recent trades has been, the first few days after the entry, keeping the original stop and waiting until there's a confirmation of that upward move before raising that stop to break even, to avoid the unnecessary shakeouts that still kind of push the names higher. So that's all I got for you guys. And if anyone has any ideas they want to go over, now's the time to chime in and we can go over some more names.
I've got 2 names I've been watching. And they both have earnings soon, so it's just a bit tough right now with all these earnings coming up. But this LDOS is probably my number one I've got on.
Okay. And you're looking through this 165, 166?
Yeah, it's a bit tough because it's been so wide the last few days. I don't really want to give it the $5 it's kind of been trading in recently, and it's got earnings on what day is that? The 5th. So I'm kind of just hoping it continues to set up until earnings can maybe give me a move, maybe an opening range breakout if they beat. But yeah, I really like that macro chart that's been going in for the last year or so. Yeah.
Yeah. I mean, this area definitely has been a very key, battleground of the name. Again, this move, even like we think of this UNH, again, we'll bounce around a little bit. But when these names do get beaten up, they get beaten up for a while. So like this, this UNH is beaten up, it's going to be beaten up for a year. And your LDOS, it's already been through that beaten up stage. It already had the nearly 50% retracement. It's been nearly a year, forming this new, massive base, and we're seeing very clear resistance. And again, it's a little bit wide in this recent range, but given, this recent range is half of just this one day's price action. It's
Mhm.
also half of this one day's price action. So yes, it is definitely still a bit wide. Wouldn't be thrilled to be buying 166 tomorrow and having to give it versus 158. But this could be one similar like Walmart, where, in Walmart, the breakout level is 100, but there was this tighter support buyback entry to get in to be ready for the 100 breakout. And for this LDOS, given it looks like this 158 is probably going to get, pushed through at some point in the short term to kind of shake out this flag. If that does happen and you get a reversal, then there's potentially somewhere to find the entry, up through 160 versus whatever that new
Mhm.
low is. Could be something light, doesn't have to be like full position. And then when you get the name back up into here or after earnings, you're able to add with conviction and rock with it as it trades higher. And that'd be like almost like SMCI if I didn't get stopped at break even with that secondary ad. It's like I had the good first entry, got chicken out, but the second entry was when it really starts to work. And that would be like this. That first support buyback isn't going to be the fast trade. It's going to be where you get good, good stock. And then that ad through that break level is when it should have, a big bullish engulfing day where you want to see like, something like this kind of action
Mhm.
through that level. We always want this kind of action, just like we have with SMCI today, but that's, more luck than anything else.
Yeah. Yeah, I was trading SMCL, which follows SMCI, and it did the same thing to me.
Mhm.
Um, yeah, it was frustrating, but I was in it for a minute,
Mhm.
so still ended up being profitable. The other one I was watching has been NTR, kind of same thing, earning soon, kind of just waiting. It's kind of got a nice little wedge pattern going,
Mhm.
more short term. But yeah, those were the two names I've been trying to watch recently, hoping they set up.
Yeah, definitely see it. See the wedge here again. It's getting just tighter and tighter. Exactly what I look for. Very similar to that Cisco, very tight wedge.
Yeah.
So that's my, again, as we have this new group, I'll be leaning more into, what I do from a trading standpoint. And my overall emphasis is just less is more. Have, come into the week with your handful of top ideas and focus on those, focus on executing on those, and letting those winners work themselves out. So for like SMCI, you know, stop is below 50, prior low a day right now. We'll see how it gets up to this, if it gets up to this 63 area, but just finding those, bigger meatball trades, trying to take advantage of the meat of the move, and less is more, slowing it down and keeping it simple.
Cool.
Hey, hey, Ben, can I
Yes,
ask a question?
of course.
Uh, uh, so, all right, like this SMCI that you're in, all right, and it took off 10%. Do
Mhm.
you take off like say like 2 to 1 profits just to like make it risk free and then maybe move your stop later, or are you kind of like waiting if the emphasis is waiting on the meat of the move,
Mhm.
taking profits a little bit later, a
Mhm.
little bit of profits later?
So one thing that, again, what I've always done is I focus on pretty much one entry and one exit. And I emphasize more on the, prior low a day, moving to low a day, and then trailing for the most part. But the problem with that, and again, trading is a continuous process of, the good and the bad. What I've noticed with a lot of my trades recently, the last 6 months or so, is with that, I'm giving too many working ideas back to break even. So what I'm starting to focus more on is taking off, 10% at 2 to 1, 10% 3 to 1, 10% 4 to 1, 10% 5 to 1, and then keeping the rest for the meat of the move. And that's just looking back at a lot of my trades over the past year. The easy kind of quick swing trades are usually within that like 5% gain range, where it could be a nothing trade, it could be an okay one, or it could be a failing trade. And once it kind of gets above that 5% area, then you kind of you have that better trade on your hands and you want to hold it. So, but again, we don't know in the moment this is going to be this is going to be hood that goes up 100%, or this is going to be, you know, Apple that goes 2%. We don't know. So
Right.
it's being more consistent with it, where something I'm currently doing is, and which I haven't really done much in the past, was having those limit orders out, because I never want to cap the upside. But I'm willing to give away 10% at 2 to 1 and 10% at 3 to 1. It's not a big, it's not going to be a big deal versus giving the whole trade back. Like some of these lessons learned, like SMCI, that trade the other day was up 5%. Day 1 and day 2 and day 3, I didn't take any off and got up break even. So that would have been a trade where instead of it being a break even trade, it would have been, a profitable one. And that's just something from just reviewing my trades and seeing them. And it's like, okay, that's a quick, easy adjustment. And I can be very consistent with that. And it's not like each trade can be different. It's, I get into the trade, I put out 2 to 1, 3 to 1 orders, have the stop for the remainder. And if they get hit, they get hit. And if not, we know what to do.
Right. Okay. I like that systematic approach. That's awesome.
Yeah. So, and again, that with the books, I'm gonna obviously adjust a lot of the older lessons, and that is one, the 10-10-10 idea that will be in Taking Profits, and we'll do, a little bit more of a deeper dive in them, like on these calls and moving forward. But those will all be written out and easy things for us to, read and focus on.
Perfect. Sounds like a plan.
All right. Any other questions you have?
I guess so. One of the members, I think in the chat, they and I got on the call late, so I don't know if you went over it.
Mhm.
He mentioned like how you guys scan for charts, like using Finviz with the different, I guess, parameters to formulate to start to look for trades. Are you guys still doing the same thing, or you in particular still doing the same thing when you look for your trade setups, or what?
All right. So I'll definitely go over that. So again, I put all my watch lists into that new channel. And if you can see my screen here, you see these first 5. So my morning routine is very simple. I pretty much work down this list of names. Now, I'm going to tell you, there's not every day I'm going through, these 2,000 or so plus names. But every morning I start a big picture. I go through the broad indexes, major markets, major sectors. I look through the names on the radar. Again, all these ones that are starred will update in real time on the Discord. So I know when you asked me earlier for orders in, you're like, there's nothing there. And it's like, at the moment, I don't have any orders in. I'm in SMCI and I'm letting that one work. So these will all update in real time on what I'm doing.
Gotcha.
And I'm basically working down this list. So it's looking at the big picture, looking at what is on the radar, names I'm looking to buy, checking very quickly the names that I have orders in to see if the name is gapping up above my buy stop, or if it's gapping down and clearly it's not going to, trigger today. Then I'm looking at my stops. Again, same thing. Is the name gapping up? Is the name gapping down? I need to cancel a stop for the 15-minute rule. Very quick, what's the most important things to look at? Again, stop at recent trades. It's more, for you guys to know if I'm out of a name or not, or still in it. Top member ideas, again, is more for this call. But then I'm moving through. Okay, let me take a look at the Dow 30 names. Let me look at some key small cap names. Let me look at, the big NASDAQ names. Let me go look at the S&P. And that's my scanning. It's old school. I'm down arrow or space barring through these watch lists with the daily chart up and just looking for these tight consolidations. And it's just, for me, it's, if I can look through 1,000 charts in the morning, it takes me 30 to 45 minutes of just, clicking the down arrow or the space bar. And then you find the 5 or 10 ideas that you want to circle back to. And that's my process just on TradingView, just working down this list. And then there's some days where, I can make it much farther, or I can skip down to the sectors and be like, okay, healthcare is basing out. Let me look there. Or tech is breaking out. let me pop in there. Or semiconductors are doing great. Let's keep a closer eye there as well. So it's basically just working down this list, focusing on the relative strength, and then just fishing for those tight risk entries.
Got you. And this watch list you just pulled up on a TradingView, like say for instance like IWM or the biotech IBBs. You just went on
So
TradingView.
these I made all of them. So what I will do is, and again, I want to keep the watch list tabs simple. In the past, we had, hundreds of them, and speaking with members, it was hard to find which ones. So I'll have the one watch list where I'll keep for now, which is just these key ones, where it's just very easy to see, the most important ones. And then I'll make a sectors watch list, which will have biotech, consumer discretionary, staples, energy, financials, etc. So if you want to look at the individual sectors, they're all there. And then I'll make one for all the indexes. Here's all the S&P names. Here's all the NASDAQ names. Here's all the IWM names, and so on and so forth. So I'll make a few different channels just so it's easy to navigate the links versus having, there's quite a few watch lists here. So to put this all into one channel, it's going to be somewhat overwhelming. So that's very easy. I can have that, created and updated on the Discord, within the next 24 hours or so.
Got you. Okay.
Just write that down. So. All right. On my little to-do list, a little sheet of paper. So I'll get that done for you guys. All right. Hey guys, any other questions that we want to jump into?
Yeah, more of a trade review with me, not really a chart, but for like AMD example, because I was in it, but it took me out. How would you? Because we were talking about taking profits, and I took profits at 48, and then I took them at 160, and I upped my stop to the prior low day, like we normally do.
Is this the
So
stop? Is this the area you're talking?
Yeah, that's the one that shaked me out. I just had my stop around there. What would you, because it was already a profitable trade from before, would you have had like a wider stop or put it like at
I mean, it's tough.
147?
Again, I put that there. I didn't know your trade. And just, seeing the candle, it's like, this is probably where you got shooken out. So again, it's just looking at the chart and saying, like, this is where the shakeout's going to happen. Again, if I were in it, my stop would have been more likely in the same spot. But this, again, is just reminding me very similar to the SMCI, where it's, okay, you get shaken out, it snaps back, and then either, again, the key thing here is this trade was working for you. And it was, where you said your entry was.
My entry was at 131. I mean, 131.
I don't know who the other person is, but that background music hilarious.
Oh, my bad, dude.
It's all good. It's all good.
I'm sitting in a coffee shop. Sorry.
It's all right. So again, you had a phenomenal entry. This name clearly has been working a lot for you. And there seems to be, kind of two spots where it's either you knew you got shooken out and you buy back and then just know that this is now the new real out, or buying it back to the break of the flag and then, low a day, prior low a day. And those are going to be the tougher trades. That's even like for me with SMCI. I was battling with this name. I had like 2 or 3 like break even or like very insignificant loss trades in it. I bought it, I believe it was this day, and I got shooken out to the low a day, took it again, got shooken out, and just knew from the prior lessons, like, I have to buy this thing back. And the technical entry was just buying it through the mini flag, almost like a Mickey Mouse flag. Here. So that's like for AMD, there's a kind of, either you buy it back here and then it's like, this is really the real out, because we don't, obviously looking at 4 days up worked perfectly, but it could have easily done this, pulled back into, 153 again. It might took a couple of days, that's where it's, okay, I'm buying it back. That's the out. Or I'm buying it through highs and it should really never look back. And that's where, it's prior low a day. At this point, stop is back here. It's already broken out enough that if it's coming back here, the trade's probably going to fail. And you're better off getting out than, giving it some crazy room. But those are just those things. I'm just, it's annoying having to buy the names back, but when it's already been working, those are the ones when they've really been working, you want to focus on. It's it's kind of just putzing around. And that's when it's like, okay, 2 or 3 attempts, it's not working. It just needs more time. Where this one, again, you still caught a huge part of the move regardless. And, ultimately this thing's probably gonna, be
Yeah,
back
because right
here.
now I feel like it's running into that resistance area from prior,
Yeah, like right
from
here.
November. Yeah,
Yeah.
from there, and I was just like, that was my target goal.
Yeah. So that was even like, I think it was like ADSK was a name a few of us were in. And, I was just trailing it. I had that stop, below the prior 2 low days. And then the name got destroyed. And this was just, it was a great trade. I bought it, grinded up, got out. And then like, this is just mess. Like, I just don't want to be involved with it. But if it shook me out and it was going to still push higher, it's like, okay, I could buy it back to 320 versus at 313 if it, shook me out and chopped around and was doing this kind of over here.
I see it now.
All right. So what else we got? Anything else going on we want to go over?
I have a question on the split.
Mm-hmm.
So I imagine you guys are 2 separate entities, right? Like now, correct? Like the big
Mhm.
picture and Pinpoint.
Correct.
I was just curious. So I'm guessing Pinpoint is his own thing now.
Yes.
I know I came in late. I was trying to scroll through
It's okay.
thousands of messages. So, yeah, I was just curious. I saw that he was starting a hedge fund. I didn't know. I was just confused because I'm in 2 separate chats.
Yes.
I'm
I know.
guessing you guys are just doing your own separate strategies and prospectuses. I'm guessing is that what the difference between them is?
Exactly. Yeah, exactly. Again, Shake's been always the active guy. We all know that's his area of expertise and what he crushes it. And on my end, it's been the financial advising and the more turtle style trading. Like Shake is the rabbit, I'm the turtle in this, in this trading example. And with the goals he's pursuing, we just couldn't keep it under one business. The lawyers were talking to like, you guys are out of your minds. It's just not feasible. So that was the easiest way for us to still provide the individual service we provide to you guys as a family. And just now with us splitting it up, he can educate you guys more so on what he does. I can focus more on the things that have worked well for me without having to kind of combine them into one, which they did work very well because our outlook typically is always in the same direction. So we both can individually write our own newsletters. We can set our own alerts. We can communicate and educate you guys to the best of our ability and also do the fun and exciting entrepreneurial things that we both want to do without having to just, make it a crock pot of businesses. We can just, run our own shop, so to speak.
Got you. Sounds good. Well, congratulations as well.
Thank you. We're both very excited. It was like, I wasn't expecting as like I don't want to say emotional, but like it was very appreciative to see the feedback from everyone that day. Where initially I was like, oh, I don't think the members are going to be that bummed. I think it's going to, everyone has their own things that they're working on. That kind of life goes on, but it was reassuring to see the things that we've done over the years has been very helpful, and that's what we want to continue with. We want to lean into that even more moving forward, and we're both going to do that.
Awesome. Yeah, I've only been here 2 months, so
yeah. So you're a little newer. Some of the guys on here, Hunter's been here for a couple of years. Mr. Bass down there has been in the group for years, and we've had members with us for almost 9 years, and have been in that chat from the GroupMe days, from the first few that joined back in like 2016. So it's been we've been running this business for a very long time, and change is never fun in the beginning, but already just once the message is You guys have received what the message is. You've seen that the show goes on, that the newsletters still show up, the alerts still get posted. There's still the community here to talk anytime that's needed. You know, it's just now two groups versus one. And talking with a lot of you members who are more active Discord users than myself, and hearing how many Discords you guys are in general with, you know, other services, it was like, okay, going from 1 to 2 isn't going to be this like backbreaking endeavor that me and Shake thought it possibly could have been. But already we've seen how quickly all of you guys have gotten to our respective Discords. So it's going to be, you know, for the better for all.
Awesome. I guess it's more of a personal question. I've been grinding since I started after Victor referred me. Should I wait till after earnings to take my first trade? I was looking at it within the next like 2 weeks, but with all these earnings coming out.
I mean, it's going to be name
Just from your
specific.
perspective.
If there's an idea you like and it's reporting earnings tomorrow, obviously don't take it. But it's not like a blanket, you know, there's, you know, earnings season is going to be 4 times a year. It's going to take up, you know, a month to 6 weeks of, you know, trading for the most part, but you don't want to be sitting out, you know, half the year because of earnings season. It's just, you want to be very aware of the names that you're looking at and when they're reporting. And if it's, especially now when you're a little bit newer, if earnings is tomorrow, it's a hard pass. If earnings is 3 days out, it's probably a hard pass. Like, give yourself at least a week so you don't get that mistake of, oh, it's Monday pre-market, not Monday after the close, and I'm still in it, and now I'm stuck in this gap down, or luckily caught in this gap up. So just focus on the name and when it's reporting, and just wait until after that name reports, but don't blanketly avoid the earnings season because every name is going to report.
Gotcha. And that was my next question. I'm guessing that 1 week would be your threshold. I'm
Yeah,
guessing.
just
I guess
even
as
like
close as you can get.
even like Apple is a good example. It's like we, you know, it's earnings is on Thursday, and you can just see Apple's price action. You know, you can see how, you know, not how big, but you know, this is a 12-point day. We got, you know, a 4-point day. You know, Apple moves around pretty normally. You have earnings in a couple days, and I got to like zoom in here to like really see, okay, and they move, you know, $2 today. It was 0.5%, because everyone is anticipating and waiting for what they're going to announce. Are they selling more iPhones? Are they not? Is their AI going to be better than everyone else's? So no one knows yet. It's kind of just wait and see mode. So you're going to see a lot of names kind of tighten up for earnings because no one's trying to make these massive bets on the name until the news is out there. So also, it's like if you're buying it, you know, on Monday, they're reporting on, you know, a week from now, and it's things moving around $1 or $2. You're just wasting your own energy watching the, you know, the little ticks up and down in the name.
Gotcha. Thank you.
Yeah, of course.
Hey Ben,
Yes,
I
sir.
have a question.
Yep.
Say like all right, you've been in, say you were in Apple when you were in what, maybe about a week and a half ago, right? It's moving well. Are you out of a good majority of the stock? Say if it's ran up by the time it gets to earnings, you're out of it a good majority of your position to brace for the news, or you want to be totally out of it?
So for earnings, for the most part, it's really just the cushion you have in the name. So Apple is not going to gap down 20%, and it's not, again, this is like the market crashing. This isn't, you know, earnings related, but Apple really isn't going to have an overnight move of 10% or 20% unless something insane happens, which they're basically a big mutual fund right now with what they do. So you just have to know the name and know the realistic swing that this name could potentially have. So on my end, typically, if I'm up 20% in a name and it's going into earnings, you know, I'm going to hold the position. Or if it's like, okay, it's running up crazy into earnings, they're probably going to, you know, like we're talking about shakeouts, the name's running up into earnings, it's probably going to pull back in. When names are getting kind of pushed down into earnings, you kind of get that like knee jerk pop higher. But if I have a big enough cushion, I'll hold it. For the most part, I'm just kind of selling into it and getting out. And if it gaps back up, you know, I'll get back in. But I'm not, you know, when it comes to earnings, it's a coin flip, you know, most of the time. And I don't want to be in the coin flips. I'd rather just take the meat of the move best I can, limit the risk as much as possible, and live to fight another day.
Got you. Same process, same thought process.
All right, guys. Anything else? All right. I think that's it for the first chart talk of Big Picture Trading. Again, I'll be doing these every Monday after the close. Same thing. Come with any top ideas. Come with any questions. We'll go over them in real time. I'll post these onto the new YouTube page very shortly, and look forward to see you guys on the next one.
Thanks, Ben.
No problem.
Thanks,
guys.
Ben. Appreciate it.
Yeah,
Anytime.
Thank you, Ben.
Perfect. Bye-bye.
Bye-bye.